thought after this recent China development that this would be a good time to check in on U.S. dollar story as a whole, and kind of where we're sitting year to date. I mean, we're practically 6 months in, which is crazy. But wondering if the dollar slump is finally over, and what could possibly help this U.S. dollar recover, because 2025 not quite the year of the dollar.
Right.
Last year definitely was. But here, just looking at the euro dollar to date, we're still up 8%. We're as high as around 10%. Swiss franc also hit a 10-year high not too long ago. But when you're looking at this chart, I mean, we've just had 2 or 3 considerable legs higher.
We've had a great couple of months of FX trading. 30-year average movement in FX majors is 2.2%. 8% in the first 3 months, 10% in its
It's a lot more.
Is incredible. So there is, and while volatility has come in a little bit, ranges come in a little bit, we're still sitting at levels we haven't seen for a long time, above 110. So there is certainly, I don't think we've settled on certainty that this is the new range. So I think there's going to be a lot more interesting pieces for us to unpack here. But it's good to talk about around scope here. So you're right. We've had a huge move, a substantial pullback.
And this is one that I'm actually surprised about anecdotally, that this China trade tariff pause over the weekend didn't lead to a stickier U.S. dollar move, because when we think about what set this euro dollar up so well through a series of 2 or 3 moves was kind of just weekend news,
right.
That in the market's mind just considerably changed what this exchange rate should be. So a little surprised that this week wasn't as...
It's always never just one thing, but you can run through the list of, you can read as much macro as you want, and is the dollar less attractive over the medium term because of policy uncertainty, and collectively, it's been part of whether you're a sovereign wealth fund or a nation holding dollars as a reserve currency. Is there a thought that maybe we shouldn't hold so many of these moving forward? And I'm not making a comment on anybody's agenda. Is that letting us actually hold on to more of this rally than otherwise, irrespective of the short-term trade noise?
Because those are, the biggest players in this space.
I mean, gold's come off. We're at 3,100, not 3,500, appreciable down move. But I still look at that as we spent a lot of time at 1,800, 1,600. It took us 2 years, but we doubled that. So this pullback, while substantial, 12%, we haven't eaten into sub $3,000 levels. Bitcoin's well above 100,000 again. Whatever you think about it, it seems like there is a little bit of more rebalancing of, and then you can make the real macro argument that if there's going to be less trade with the U.S., there's less demand for dollars.
This is true.
All very kind of theoretical pieces that really, sure, you can have that conversation. Do those thoughts ever figure in to my daily trade setups? Absolutely not.
Right. But as you mentioned, I mean, it's looking. I know you and Frank talked yesterday about the head and shoulders pattern in the U.S. in the euro dollar.
Yeah, we're going to have to work on his drawing skills. It's a work in progress.
It looks like, at least so far, that the top is in that market for the time being. And here we've just got some of the U.S. assets. We've got the S&P 500, TLT, long bonds, and the dollar index. And our good friend Chris Vecchio sent in a chat the other day that this has been a boring year so far. I mean, S&P is right where it started, and bonds are right where it started. And so U.S. dollar really the laggard here, as we have approached now, made up all those losses in the stock market and back at lows in bonds.
It's a good point. And I think this is actually tradable context, is that bonds are back to, I mean, we plumbed 112 yesterday. We were up a little bit, but let's just call it 114. We're right back to the start. SPOs are really close. It's still down a little bit on the year, I think, but
Right.
tiny. The dollar, as you mentioned, 8% different. Now, how do I take that big picture context and make a tradable opportunity out of it? I think we go back to what we talked about the first half of the show. Market structure, euro's still high, but it is kind of having a hard time staging another rally here. So is Aussie a little bit, even though it's at a lower part of its range. If we see a rollover towards the end of the month, is that, or end of this week or month, is that the alignment that we're seeing? Could that be a drag on short dollar positions paying you? And that'll be an interesting thing. That kind of alignment, this is a piece that you definitely park in the back of your mind
Right.
and watch how structure unwinds. And if we are threatening and substantially trade close to 110, that puts everybody who has been building longs over the last 4 weeks in a
Right.
difficult position.
Agreed. And one of the major news items we get now are just trade announcements. And I feel like when we started this exercise of
This is really interesting.
shaking out what these trade announcements will actually do for the market. It's now, in my mind, as we've learned from kind of how our relations with China have gone, it's not really about who wins in the market size right now, who comes out on top in any of these trade deals. It's just a certainty or less certainty picture because, as you called out earlier, with the move in gold, which here we have the British pound against the dollar versus the gold correlation over 3 months. Now, back to highs dating back multiple years.
Right.
As I took pound because Eurodollar has a lot of liquidity and is highly reactive. Pound hasn't been as reactive, slightly more kind of drifting with the euro and against the dollar. But this was very interesting to me that now it's every trade announcement, it's adjudicated just on, do we have a clearer picture of how the next 6 months will be, or does this shake things up even
Right.
more?
Interesting correlation. I wouldn't have thought it was that high. So
Agreed.
Yeah.
And we'll see, if it breaks down as things start to settle in.
But it's interesting. That old saying, all the correlations go to zero. Here's another example of during the times of stress, anything. And for me, what's interesting is, yes, we're at the upper end of the range. Historically, I wouldn't have thought we had that correlation to
Right.
moving forward. So,
And then just finishing up here is what dollar pair do we look at? I mean, we talk about structure and what opportunity there could be in Eurodollar, Australian dollar. But to me, it's interesting that this dollar yen is really lagging so far this year to date, down 7% now. And when we talked about the S&P 500 being back to where it is, bonds being back to where it is, this is a pair that typically moves with uncertainty, has gotten a lot of bid on uncertainty, and a lot with U.S. rates. Now U.S. rates looking to stay higher for longer, and a lot of that uncertainty coming out of the market. So what's really holding back this dollar yen from going back above 150? Not a lot of Japanese yen news, not a lot out of Japan. So this one is one to watch for me. What are your thoughts here in the dollar yen?
I think you summed it up wonderfully. Throughout the month here, May, and the last half of April, we put in that very clear bottom at 140. We've built a lot of energy off of it, and structure-wise, we're seeing higher highs and higher lows. So the pullbacks are always a little bit less than they were last time. Long-term $145 yen is really high.
Right.
As I told you, I traded yen at 78 cents and 162. So long-term dollar yen is still awfully high, but
Is that relevant? Yeah.
I don't know.
Yeah.
Honestly, day to day, absolutely not. It's just, and I'll tell you, that is actually to my detriment because I look at 146 and it keeps just screaming at me. I don't want to buy these
Right.
because I've seen this dramatically lower. Yeah, that was 20 years ago. So it's really it's a great observation. It's absolutely not relevant to our decision making. I think, and we always say we take market structure as it's given to us. And right now, this is starting to get some constructive structure, whether it's that interest rate different. If volatility around uncertainty is normalizing, interest rates become much more a driver of FX,
Right.
which means there could be energy behind this move to the upside. So you're absolutely right. It's a good way to break it down and think about it and clear out the noise. Go back to, okay, if we're seeing normalization, as you mentioned, and I think that graph of where everything is, everything's unchanged. That means interest rates come back into play as a driver of FX. If that's the case, the message from Japan is there's no message at all.
Right.
And if we keep getting stronger growth numbers in the U.S., we're not going to see rates fall.
Right.
How much they rise, we're not sure, but they're not going to fall, which should be long-term bullish for dollar yen.
There you have it. We'll see what's next for the U.S. dollar, if
Great
it is
walkthrough, Glenn.
on the road to recovery or if another collapse is in store.